Let me start with something that most trading educators will never admit to you. Every prop firm trader blows accounts, every single one of them, including the ones you see online with the big payouts and the Lamborghinis and the screenshots of big numbers. I have blown more accounts than I can count. Over $2 million in payouts over 8 years, and yes, but also a lot of blown accounts along the way, even multiple in single weeks at some point. And here's the thing that nobody tells you. Blowing a funded account is not the problem. It's normal. It is part of the business. What actually separates the traders who build real wealth from the ones who quit is not whether they blow accounts. It is what they do in the next 72 hours after they blow one. Because most traders handle this part really bad. They either spiral into depression and quit for months, or they panic and immediately buy 5 new challenges trying to make it back. Or they pretend it did not happen and carry the same mistakes into the next account. None of that works. Not one of those responses is the right one. I want to show you the actual system I use when I blow a funded account. How long I wait, what I review, how I think about whether it was my fault or not, and when to come back. And when honestly you should stay away for a while. Again, 8 years of doing this, hundreds of blown accounts along the way to the payouts I have now. This is the recovery system that I have built from that. With 5 layers, let's just get into it. Layer 1 is the first few hours after the blow up, and this is where almost everyone makes a mistake. When the account blows, something specific happens in your head. There is a surge of emotions all at once. Shock, anger, regret, embarrassment maybe. Panic about the money you just lost. And also the urge to do something about it immediately. That urge is the most dangerous thing in prop firm trading, because whatever you do in the next 2 hours with that emotional state loaded up is almost certainly going to be the wrong call. Buying another challenge right away, opening another fund account you have and sizing up to recover, starting to analyze what went wrong before you have even calmed down. All of those are versions of the same mistake. Trying to act when you are not capable of acting well. Here's what I actually do. I take a few hours off, not to grieve, not to have some deep emotion processing moment, just to let that chemical reaction in my body settle down. Because that is what it actually is, right? A blown account triggers a genuine physical response. Your heart rate is up, your cortisol is elevated, your brain is in threat mode. And in that state, you cannot make good decisions. You literally cannot. The hardware is not available for it. So I close down the trading platform, I walk away, I do something completely unrelated to trading for a few hours. Could be going for a walk, the gym, could be getting something to eat, could be just lying on the couch and letting my brain reset. And here is the important part. I do not analyze during this time. I do not think about what went wrong. I do not replay trades in my head, because I know that any conclusions I reach in that state are going to be emotional ones and not useful ones. The goal of the first few hours is not recovery. It is to stop making decisions until my head is clear enough to make good ones. Most traders skip the entire layer. They go from blowing the account to buying the next challenge in under an hour. And that is exactly why the same thing happens on the next account. This is exactly what the recovery should look like. Now, layer 2 is the review process. And this is the layer that actually makes you a better trader if you do it properly. Once I am calm, usually later that same day or the next morning, I come back and I do an honest review of what happened. And I mean real honest. Not the version I want to be true, the actual version. There is one question that matters more than any other at this stage. Was this my fault or was it the market? And the reason this question matters so much is that the answer completely changes what you should do next. If it was your fault, you have something to fix. If it was not your fault, then fixing anything is a mistake, because you would be breaking a working process based on just one bad result. After 8 years of trading, I can tell you the answer is almost always the same. It is almost always your fault. And I know that sounds harsh, but in my case, about 90% of the time, I can go back and look at what happened and identify the exact moment I broke a rule or made a decision that was not in my plan. It is rarely the market. It is almost always me. The market did its normal thing. Choppy conditions, fake breakouts, reversals, those are all normal. What was not normal was me taking a trade I had no business taking, sizing up when I should not have, chasing price after a loss, taking a second setup after already hitting my loss limit for the day. Those are the things that actually blow accounts, not the market. Now, there is about 10% of the time where the answer is genuinely yes, that was just a market thing. A legitimate stop out on a valid setup setup that happened to be wrong. Every trader gets these. They are part of the math of trading. If that is what happened, the review is kind of short. You took a valid trade, it lost, you just have to move on. But you have to be brutally honest about which bucket you are in. The trader who says that every loss is just the market is lying to themselves, and they will keep blowing accounts forever. The trader who can admit that 90% of blowups are self-inflicted is the one that actually fixes the problem. Layer 3 is the pattern audit, and this is where things get really useful. Once you have done the honest review on this specific account, you need to zoom out, because a single blown account is just data. A blown account in isolation does not tell you much, but when you look at your blown accounts across several months, that is where the real information is. Here is the exercise I do. I list out the last several blown accounts I have had, and I write down the specific reason each one blew. Not general responses like, I was undisciplined, but specific reasons, like sized up after a win streak, took a revenge trade after a loss, traded through news because I was desperate. The actual specific cause. And what you will find, I guarantee this if you are honest, is that your blown accounts are not random. They are the same 2 or 3 mistakes on repeat. For me, when I was earlier in my career, the pattern was always the same. I would size up at the top of a winning streak, and that was it. That was how I blew every single account. Not revenge trading, not market manipulation, not bad setups, sizing up at the exact moment my confidence was highest, which was also the exact moment I was about to lose. Once I identified that pattern, I built a specific rule around it. Same size, every trade always, which I have talked about in other videos. That rule exists because of the pattern audit. I could not have built that rule without first identifying the pattern. Most traders never do this exercise. They blow accounts, feel bad, and try harder on the next one. That is not a solution. Trying harder does not fix structural problems. You need to know the specific pattern you are stuck in so you can build a specific rule that breaks it. The pattern audit is how you actually stop blowing accounts, not by trying to be more disciplined, by knowing exactly what you do wrong and building a system that makes it impossible to do that thing. Layer 4 is the return plan, when you actually come back and start trading again. And here is where my approach is probably different from what most educators recommend. A lot of traders will tell you to take a week off after blowing an account, 2 weeks, a month, like really let it sink in. I disagree with that. When you blow an account and you have done your review and you understood what went wrong, the right move is usually to just come back the next day. Now, I want to be clear about why I can do this. I have built up enough payouts over the years that a blown account does not put me in financial distress. I can afford to lose a challenge fee. I can afford to buy a new one. The next day I can be back trading without that hanging over me. Now, for a newer trader, this is different. If the challenge fee is a meaningful chunk of your monthly budget, you need to build your financial runway first. Not because of the trading, because of the pressure. Coming back to trade when you are worried about losing another challenge fee you cannot afford is not coming back rested. It is coming back scared. And scared traders, they make the same mistakes they made last time. But assuming you have the financial stability to absorb the loss, the next day is actually the best time to come back. Because here's what happens if you take a long break. You lose touch with the market. You lose the rhythm of your setups. You build up this huge mental weight around the next challenge where it feels like it needs to work or else. That is a worse mental state than just coming back quickly and trading normally. The one thing I will say is this: do not come back the same day. That is different. Same day return is just revenge trading with some extra steps. But next day, after you have slept, after you have done the review, after you understood what went wrong, that is completely fine. Come back smaller if you want. Trade one account instead of 3 while you rebuild. Take fewer trades than normal for the first few days. But do not disappear for a week unless something genuinely traumatic happened on the account. Staying away too long often creates more problems than it solves. Layer 5 is the one that most traders do not want to hear about, but it is genuinely very important. Sometimes you should not come back the next day. Sometimes you should not come back for weeks. And there are specific signals that tell you when this is the case. I have been lucky in one specific way over my career. I have always been able to stop after 1 or 2 blown accounts. I have never been in a situation where I kept blowing accounts repeatedly for weeks and could not break the cycle. But I know traders who have been, and for those traders there is a different protocol to do. Here are the signals that tell me that a longer break is actually needed. First signal: you have blown 3 or more accounts in the same month using the same specific mistake. Not 3 accounts blown through 3 different mistakes. 3 accounts blown through the exact same pattern. That is a sign that knowing the pattern is not enough. Something deeper is going on that needs to be addressed before you trade again. Second signal: your emotional state around trading has changed in a bad way. You used to be calm approaching the markets. Now you feel dread or anxiety, or you are just having a bad mood with people around you on trading days. That is a sign that trading is damaging you in a way that needs to stop before it gets worse. Third signal, you are starting to trade from a financial place instead of a skill place. Meaning you are taking trades because you need to make money, not because the setup is there. That is a death spiral, and the longer it goes, the worse it gets. If any of these are happening, coming back the next day is not the answer. You need a real break, weeks or months, completely off the charts. Sometimes a trader needs to step away and rebuild their relationship with the markets from scratch. There is no shame in this. The traders I respect most have all had a period where they had to walk away for a while. It is actually a mature response to recognize when you are not in a state to be trading and to act on that recognition. But most blow-ups are not this. Most blow-ups are single events from a specific identifiable mistake. And for those, next day return after proper review is the right move. Reserve the long break for the situations that actually call for it. So, to bring all 5 layers together. Layer 1, the first few hours. Do not do anything. The chemicals in your body are not going to let you make good decisions. Walk away, reset, come back when you are calm. Layer 2, the honest review. Was it you or was it the market? About 90% of the time the answer is you. Be brutal about which bucket this blow up falls into. Layer 3, the pattern audit. Look at your last several blow ups. Find the 2 or 3 specific mistakes that keep showing up. Build rules that make those mistakes impossible. Layer 4, the return plan. Usually the next day is the right time to come back. Not the same day, not a week later, next day. Assuming you have the financial stability to handle the loss without panicking. And layer 5, the signals for a longer break. Repeated same mistake, damaged emotional state around trading, trading from financial pressure instead of skill. If any of these are present, a real break is needed. Weeks or months, not days. I have blown a lot of accounts over 8 years, more than I want to count, but I have also hit over $2 million in payouts in profit over the same period. Both things can be true. In fact, they have to be true, because anyone who tells you they have made serious money from prop firm trading without blowing a bunch of accounts along the way is just lying to you. The goal is not to never blow accounts. That is not realistic. The goal is to have a system for what happens when you do, so that one blown account does not turn into 10, and the pattern of blow-ups gets broken instead of repeated. That is what real recovery actually is. If you want to build this kind of system with accountability and guidance behind it, I have a mentorship program called the Prop Firm Blueprint. This is only for serious traders who want to build an income from trading. The link is in the description to apply. And if you are looking for a prop firm to use, I recommend Hola Prime. They have the fastest payouts in the industry with a 0 payout denial policy. You can use code NFX for a nice discount or the link in the description. Thank you guys for watching. See you in the next one.